Earnings Whisperer. All right, everybody, welcome back. So today we're going to talk about this company called Earnings Whisperer. Been around for a long time. Um, when I first got started into trading, I didn't quite grasp how important or how deep earnings went. It's easy just to look at a stock chart and consider how well a company has done from one earnings to the next, but there's so much more that goes into it than that. And of course, there's the popular hype of, just trying to pick before it reports if we think it's going to go up, if we think it's going to go down. But, that one little binary moment when it reports is really just a small part of the earnings, and the larger trades actually run into earnings or after the report run out the other side of earnings. Because if you think about it, you don't really want to put a lot of money on just a coin toss of, gee, I think they're going to do good, or maybe they won't do so good, right? Just on the earnings itself. So over the years, there's been a lot of research done, and there's one company that really stands out when it comes to doing that research and providing the background and the depth to trade earnings with conviction. And really, to me, that's what it's all about, having the conviction to put on a sizable trade with the forewarning and the knowledge of what a company has done in the past or what they're expected to do after their latest report with the information that they provided. So we're looking at Earnings Whisperer, and just across the top, we have their menu system. The calendar makes it nice and easy. You can go and look at the charts for things that are nearing an earnings event. And then they have kind of this weekly grid of just the names in what we call a heat map down here, and then the names in a column before the open, after the close. Now, you may be looking at this thinking, that doesn't seem to be all of the names, and you're right. In this column, they're really just trying to highlight the ones that they think have a really good number, right? Just bringing those to your attention. But this isn't the only ones, right? And then it's only showing ones with confirmed release dates, because sometimes a company will give a projected release date, but then they don't confirm it or follow up with it. If we go back to that calendar again, we can also look at things on the month. That way we get a bigger view and we can kind of just scroll out. But again, these are like the most popular names, the ones with a good number. And we're getting into that part of the earnings season where there's a lot of names reporting. They would not all fit in here, right? It would be very cluttered and we'd have a hard time trying to see it all. So it's the most anticipated earnings releases. It's not all the releases. You can get all of them, of course, but you can also get a deeper perspective. Today's the 4th, so we'll just click on that, let it think for a moment. Now we've got a list, and I can scroll. As you can see, now we get that in-depth view with everything that's hitting in the morning. One of the names that stands out right now is AMD, but there's some really good ones. We got Google, Snap, ENPH. Those have all been really good plays in the last 12 months. And that's just for today, right? It just keeps going. So you can see how easy and intuitive this calendar is across the top here. And if I wanted to go farther out in time, they offer all the way into March. So let's just take a peek at the third Friday of the month. That's OPEX for March, March 20. And we'll see what is out there. And maybe we find something, maybe not. Remember, they're only giving us confirmed dates. So if I knock that off, now we can see we're starting to see some names like Nike is out there, FedEx. So, you know, really a lot easier to get a collection of data all in one spot than it is just hunting around on the internet trying to find all this information. Now, when it comes to earnings, there's this idea that no matter what a company is doing by itself, we still have to look at the bigger picture. What has corporate earnings been doing? Are they estimating higher? Are they estimating lower? What did they do last year? What's the S&P and the NASDAQ doing? And then we have to worry about things like supply chain issues or gold. We got to, think about crude energy prices, supply chains, tariffs now. That's another thing that's on the table. There's so many things that we have to think about. And in the top-down approach, they try to cover some of that. We get the heat map, the market overview, and the idea behind this is, think about the sectors and the industries that a particular stock may belong to, and how has that been doing in general? Because all of this has to be taken into consideration, right? You got S&P earnings by the week, how many names in a particular sector like XLY, XLC, and this shouldn't be too unfamiliar to you if you've traded earnings for a little bit yet. For an example, banks usually start the earnings season, and then after banks, we get the Mag 7 going, which we're about done with them. We're going to get Amazon and Google, and that should be the end of the Mag. Oh, no, excuse me. We still have NVIDIA later in February, but if we leave NVIDIA out after this week, we should be done with most of the Mag 7, and then we'll move on to another sector or industry. And that's kind of the idea, right? So we want to do this top-down approach and have a pretty good idea of what's the sentiment out there and how has earnings been doing in particular groups like communications, financials, consumer discretionary, because those are going to be affected by the broader market. And then individual companies which make up those sectors are the ones that are going to be struggling or doing good. And that would be reflected in a continuing positive earnings cycle or negative earnings cycle. We can see the investor sentiment, and they have a lot of tools that are proprietary to their system, right? So if you're looking at it and you're thinking, I don't recognize this, this isn't something I've seen before. Yeah, it's their tool. They do have documentation on it, help you kind of learn what the tool is, get more familiar with it. And we can see when we scroll down, we've got the total, the 1 week average, the success rate, 1 month average, 1 quarter average, and then of course the bottoms up sentiment. Let's scroll down here. That has their earnings whisper sentiment index, which is a compilation of a number of sentiment measures ranging from the total short interest in a stock to their own surveys of investors. Pretty neat stuff, right? So in the top down, we also can go into individual sectors. I can just, randomly, let's look at communications. I was looking at this earlier. You got the bubble. So if you're wondering, what are the more heavily weighted names in this sector, or which ones are doing really good? You see Netflix 9.7. That's really good. And yet Google, which is a monster, it's this tiny little bubble down here hiding behind some of these other ones like Comcast, T-Mobile, AT&T. So it's a little different perspective, right? That might not have been what you're typically thinking about when you think of the earnings weighting inside a particular sector or ETF. And then, of course, we've got the strength and this proprietary number. I'm going to just stop on communications. It's at 61.9. And when I get the mouse there, if I get it to, there we go, 13 out of 21 are outperforming the S&P 500 since reporting earnings. That's doing pretty good, right, for this particular earnings cycle. Communications seems to be doing the best out of all of the sectors for this particular earnings cycle. Now, if we look a little farther out, 200 days out, then the number isn't as impressive, say consumer discretionary or financials. But above the 200-day moving average, we have 15 names in that sector. And then below the 200-day moving average, we have 6. But if we go up here to financials, 63 names are above the 200-day moving average and only 6 are below. So financials collectively are doing much better when we're looking at the 200-day moving average. So all of these tools, if you think about this one for an example, you could individually do that kind of legwork on your own, right? I mean, it would be a very tedious task, but you could get that done. But it is nice being able to just zoom in on what you want, really hone in on the name that gets your attention. And all of this is clickable, right? So I'm going to zoom in here a little bit and we're going to look at this company right there, Meta. Yeah, it was just buried in there, right? Didn't even notice it because it was such a tiny little bubble. So this one's got earnings a long ways out. It's already reported. We're looking at April 30th. And it gave us the last earnings here. It beat expectations back on January 29th. And if I clicked on this, it would give us the nice little write-up. It's got the chart. And if I want to, swap that over to the weekly, which is how I like to look at things. I tell you, I really like the fact that they give me control of the chart a little bit, right? It's not like I could put my own indicators on there, but I like looking at a weekly, and I don't like having to leave a platform that I'm on to go back to my own charts and look at things and then come back to the platform and look at things again. So I like that I can just go to the weekly here. When we can see the earnings announcements and whether they beat or not and how things have been going, this is really helpful. Got the sentiment index, the short interest, and of course, just a generic MACD down there, but everything right at our fingertips, right? And then of course you can put a vote on there if you're interested in that. So the top down is the idea that we want to look at the broader market and consider how that broader market may affect a particular earnings play that we're interested in. When we bring it from the other way around, running things from the bottom up, this is where they've got things like breakouts and breakdowns on individual stocks, full earnings releases, their own pivot points. It's like floor pivots, the drift, which is they got a little acronym for it, but it's basically the after report and what a company does after its report, the history behind that. So the drift, as I said, they've got a lot of education and documented material to help you get familiar with their tools, their acronyms, the little ABCs of the platform, and nice little write-ups here. That they always have something new if you want to dig a little deeper, which I like. I'm a little bit of a nerd. I like being able to just dig a little deeper. This is today's earnings movers. And of course, I had to cut it off here. I think I have to zoom to the side, but there's a lot of names on the list. And then if we put it into a heat map, then of course, it scales down into these tiny little boxes, makes it harder to see, but average move, today's move. So you get that plus and minus of what does it normally do and what is it doing today? That is a great perspective to kind of get some insight on the volatility of a company for its earnings. I really appreciate that. Spot really didn't do that much, right? I mean, okay, that's a 10.5% average move and it moved 10.8. It moved a lot. What I mean by it didn't really do much is it didn't really outperform much. Same with Fox. Fox was in line exactly as anticipated, or EPD exactly the same. It didn't really, overshoot much. It depends on how you like to play earnings, right? Some people are looking to do things like MPLX. The average move is less than 1% and it moved almost 3%. And that's where a lot of people like to play earnings. They're hunting for the big outlier move that catches everybody by surprise. If that's your style, hey, great. They've got something for you. But for the rest of us who's perhaps looking for consensus and consistency so that we can size up with some conviction, then we're looking for markets that behave the way they're supposed to behave, not the outlier moves that catches everybody by surprise. Still, either way, and of course, all of these are clickable. So if I wanted to, click on PayPal here, it'll open it up for us, give us that sort of background that we're looking for. and, really give us what we're missing, or give us uh, that clarity and insight. So we've gone through calendar, top down, and bottoms up. These two right here, investor and trader, this is their two different subscription packages. So some people really want the insight on the trades. They want the setup, the long and the short opportunity, and I don't want to say that they're not traders, but they're people who are looking for a little bit of help in the trades that they're going to take. I think that's a fair assessment. The investor, on the other hand, they're going to give you the information and you can put your own trade together, right? Or, of course, you can get both packages. There's nothing wrong with that. If you haven't checked these guys out yet, they are a little pricey, to be, completely transparent. If you're paying for it on a monthly basis, it's around 200 a month. So we're talking what, $2,400 a year. But they do offer packages, and while I didn't look, I bet they also offer things like Black Friday sales events, or maybe Cyber Monday events, holidays. Maybe they do a Christmas or something like that. I don't know for sure, but I mean, most places do. So you could hunt around for a coupon, catch them on sale, or you can get one of the packages. The packages they offer is, if you go for a quarterly subscription, they will they'll take some off. I think the quarterly subscription is, instead of, well, it's 500 a quarter. So you'd be getting some free time on that one. And if you get the entire year, instead of paying $2,400, I believe the yearly is $1,800 instead of $2,400. That's a pretty good sale too. If you're hearing those numbers and you're thinking that is a lot of money for this subscription, it is a lot of money, but you absolutely get what you pay for too. So you could try to, scour the internet, hunt for the information yourself. Maybe you find bits and pieces that you can cobble together an idea of what a particular company is going to do for earnings. But after all of that work, you would have one company's possible earnings, maybe. What are you going to do when there's 20 or 30 names reporting today, and you're also trying to get the background or the history of that particular company and its earnings? Does it normally beat? Does it normally miss? Does it stay in line with its estimate? There's so much background when it comes to a company, and what it has done in the past, what it's expected to do in the future, and then even just the things that they're focused on as a company. Are they, doing a lot of mergers? Are they dealing with activist investors, making new products? I mean, there's just so much into it. When you have the conviction to size up in a trade, you're able to pay off these sorts of subscriptions pretty early in the year. And then the rest of the year, it's all profit anyways. So, you know, on the one hand, if you don't have uh, any subscriptions that, are kind of pricey, this can be a bit of a sticker shock. But there are a few subscriptions out there that, you really have to size up for. This is one of them, and it's worth it. So when you're checking out the investor versus the trader, I was giving you the price for both. I don't know the individual price of, one versus the other. So that's something you could check out too if you're not particularly interested in both sides, right? Maybe you're really just more on the investor side, or, you're really just more on the trader side. Take that route. It's certainly something to consider. If we open those up a little bit, we can see the earnings whisper report. It's a weekly look at the earnings from both a top down and a bottom up view. Increased optimism among consumers and businesses since the election. It's now starting to show up in the macroeconomic data. And of course, they've got a report with this. If I click it, we'll start to dig down a little bit deeper into these. But that background is there. Then, of course, we can look at the grades. If we want to only look at A+ setups or something a little in the middle of the road, we can, of course, do that. If you're wondering, why would you want to look at something that's more middle of the road or even on the far end of the spectrum here? If I am playing lotteries, one thing that I like to look at is something that could potentially be a game changer, right? Something that's an F right now that may be turning things around. Carvana is a really great example of that, right? They had activist investors come in, they really got their books in order, and they went from $2 to $200. Now, sure, they didn't do all that in a week, but it was a beautiful climb back up. And it all started with an F. So, you know, it's not always about just looking at the top rated names. It's also about, looking at what could be changing around in the future. So if I do go to the A-list setups and we start to scroll down, all of these are clickable charts. So, it's really simple to just say, hold the control button down and hit DocuSign here and just jump right over to it. I was actually expecting that to open in another page. But if we jump back, I want to right click on it and open it to another page. I should have done this on my other browser. So it's not a big deal. Just my other browser, I can hold the button down, and when I click on something, it'll just open that new page on a new tab. Not a big deal. So we got Schlumberger, DocuSign. I mean, the list goes on, right? And it's all just really nice, integrated. You click on it, it brings up the information that you want. And if you haven't seen these before today's video, your eyes might be looking around in different spots, not quite knowing where the information is. But if you get used to looking at these pages every day, everything's exactly the same spot over and over again, right? There's real value in that consistency because things just start to speed up and you get to whipping through these names really fast, knowing exactly what you're looking for, where the information is, and moving on to the next one. It just becomes a rapid process. Really comfortable using it. It takes a small amount of time. Now, my colors here with the darkness and the tan here, maybe that's not suited to you. Maybe you want something a little cleaner. I'm not sure they offer that. I think when I'm on my other browser, it has more of that black and white colored color scheme, but what suits you, right? I like this darker color. It's not so hard on the eyes. So all of these have been on the investor side, looking at guidance. You know, the idea here is companies will, even when it's not necessarily earnings, companies will come out with guidance. They'll give a forward future estimate. And, for an example, Apple has in the past 6 weeks or so before earnings, they'll lower their expectations for an earnings release. And then, of course, the stock drops, they get into earnings. And since they lowered expectations, yay, we beat. And the stock rallies up because they beat the new expectations and everybody's happy. If you didn't know what was going on, you missed that, then you might not have understood why did Apple's stock price drop right before earnings, and then you get caught on the wrong side when they report and it's positive and it runs back up again. So getting the guidance is really helpful. These look like the guidance from the earnings today, right? It's the earnings guidance. But when it comes to guidance, it doesn't always have to be from earnings. So then we've got things like reactions. The idea behind this is after a company reports, what's been happening if it, had a really positive earnings and dropped. I'm sure you guys have seen that before when a company had earnings and it's really good and it drops. Oh, that's so frustrating. but it only drops for, say, a day or two, and then it rallies back up and it continues in that bullish move from the earnings being really positive. So the idea behind this is looking at earnings reactions, and since the earnings report, and you just move this slider to match what it is that you're looking for. We got Microsoft here for an example. They missed expectations January 29th. Their score is in the middle of the road. Their next report is April 30th, just like Meta. And as we can see, it has the down arrow and it dropped down into this level. We had another arrow back here, another one back here. So we're just running that range sideways. It's really not going anywhere. Even the sentiment and the short interest, we're just holding the line, right? Nice and sideways, just not getting much. So all of these are a part of the investor services. And then we have the trader services. The plays, scores, whisperings. Let's take a look at that. Brief analyst commentary about upcoming earnings releases. And some of these have more than one comment. So if we kind of scroll down and see if I can find one of those. I was just looking at one earlier that had, there it is, Roblox has 4 different comments on there. So, if they have it, it's going to be on there. It's not just, well, we gave you the one comment, we'll just move on to the next one. No, if they've got it, like Amazon here, they're going to put it in there. And I like that, but they're still not overwhelming us with too much information. Everything is nice and neat, clean, organized. You've got the number, the report period, the whisper, and the estimate all in one spot with whatever commentary it happens to be. And I can go through this list really fast. They're sorted by the date. So we can see February 4 up here at the top. That's today. And as we scroll down, we get farther and farther out in time. Perfect, right? I mean, just very intuitive, easy to use, and nice and clean. So the trader services, the investor services together, it's just a really nice package. You get that depth and background of the broader market, and then the intra depth perspective between each one of these companies. Don't let this bearish signal confuse you, right? We're looking at bullish setups here, and it's offering me a button so that if I did want to look at bearish setups, then I could push that button and it'll run a scan and find me the bearish ones instead. So these are stocks setting up for a potential move in the directions of the fundamental data. And so we can see like this one's got earnings on the 6th, and it is setting up for a potential move. If we go to click on it, maybe they'll offer a little insight there. We can see their last earnings that push back up into this high volume node. The grade and the sentiment, everything just all wrapped up here. The options are implying a 5% move, and it normally makes a 3.5% move. So a little bit of insight there, right? So this is the Earnings Whisperer platform. And then, of course, once you're subscribed, they are on social media, so you can catch all of their tweets. And there's a dashboard, which, you can put together your own watch list. That'll help you keep track of the stocks that you're particularly interested in. But it also has your subscription in there. So if I was to click on this, it would bring up, my email address, my subscription date, and all of that sort of background information. It's like the user area. And of course, you can always just run a scan. So I don't know, let's just look for Shopify, right? We'll just randomly anything. If I was wanting to find a particular company, I can always just run the ticker symbol and get the information that I'm looking for just like that. Nice and easy, right? I don't have to go crawling through the list trying to find something. I can just type it in and get there. So I hope this brief video really gives you some insights on the Earnings Whisperer. And there's all these specialized tools out there nowadays for retail traders, from unusual options activity tools, dealer gamma hedging tools, uh, all those sorts of very nuanced and sophisticated data points for a particular thing in the trading world. This is exactly like those, but solely focused on earnings. And it stands alone, right? There's nothing else in its class. If we start naming off unusual options platforms, there's so many of them. And dealer hedging dynamics, there's more and more platforms that are all doing that. But when it comes to, an earnings app, there's nothing like this. I really appreciate your time, guys. I look forward to seeing you at the next one.